Thank you very much, Cecilia. I'm very, very proud to be here. My name is Michael Chesley. I'm an agent at the Crest Insurance Group in Albuquerque, New Mexico. This is the first time I've really done one of these types of presentations, so bear with me. I might hum and haw a little bit, might repeat myself a couple times. And remember, we're talking about insurance, so hang in there. Some of it might be a little dry, but I hope to give you some stories and some ideas to kind of make the experience easier for you. I've been in insurance for, about 9 years. It's my second career. Prior to that, I was in the hospitality industry. I've been a general manager of 4 different hotels. I also owned a couple restaurants and a bar here in Albuquerque. And I've always felt like I'm an entrepreneur. I have a very strong entrepreneurial spirit, and I really respect people that will go out on a limb and do that. Also, have always been, and so have you, an insurance consumer. If you drive a car, then you're more than likely an insurance consumer. So I was lucky enough to have a very strong agent when I was in the restaurant business that really kind of gave me the ins and outs of ways to maintain my policy and try to keep costs at a normal level. And really what it boils down to, as a business owner, you should really instill a culture to have a safe environment and to be able to teach your people how to watch out for items that might create a claim. And that is from anything to keeping areas clean, to make sure that there aren't any hazards in the way for customers or clients. Also to make sure that the products that you make are going to be safe and benefit the community. So today, I'll briefly explain some different types of insurance products that you may need, along with explaining how agencies put those together. I'll also help you understand that there are tools that will not only protect your company, but also keep it going if there's a tragedy. And then we'll go on to some questions and answers and see where it goes from there. So let me read this real quick. The information presented is designed for the general understanding of insurance principles and practices. Individual insurance needs and requirements will vary based on the individual business operations. So stuff happens, right? Accidents happen, death happens, things out of your control happen. We've got to find ways to take care of that stuff. And so many insurance companies started really as co-ops, and this was groups of citizens in the same communities that got together and created funds to help each other. This would be not only to help with money, but also help trying to get whole again. Rural communities did this all over. And basically, that's one of the reasons why you see a lot of current insurance companies with the name farm in them, like State Farm, Farm Bureau Insurance, or Farmers, because, a lot of times out in the rural areas, they took care of themselves. So they not only took care of rebuilding a barn after a fire or tornado and paying for it, but they actually helped each other do that. Now today, we've got close to 6,000 insurance companies in the United States of America. And a lot of them have gotten to be very specific for certain industries. For instance, cannabis. The insurance companies that are insuring cannabis right now are really only doing cannabis related policies. We tend to get a little upset with insurance, and it does get expensive. But basically, when costs go up, premiums go up, because the insurance companies have to pay for goods just like you and I do. So right now we're in kind of a turbulent situation with inflation. And so we're going to see premiums be passed down. So I just want to prepare you for that. So you might be asking, what role does insurance play in my world? So insurance policies not only provide money to make you or your businesses whole again, it will also provide legal help in case of a lawsuit due to accused negligence. Business owners can have their future earnings garnished or pay restitution. So it protects your assets and your future earnings. It also provides a safety net for you. The other thing insurance does is it allows you to do business with others. Many organizations, such as the federal government or really state government or local government and private sector enterprises, will demand that you have the proper coverage in place before they enter into a contract with you. In the same token, you need to make sure that your vendors and customers are able to provide you protection on your policies. So it goes both ways. The other thing insurance does, it creates a secure work environment. Having the right insurance will cover employee injuries and any accidents that may happen, and it will give everyone a sense of security in your business operations. So I want you to think of your insurance coverages as buckets. Each bucket will carry a maximum amount of money for specific situations. So let's take a look at some buckets. Oops. Went a little fast there. So let's talk about commercial general liability. General liability comes into play when you are negligent or may be negligent, and stuff happens, right? From something as simple as a slip and fall at the front door, or somebody suing you for something that maybe an employee might have done to them. So it provides coverage for your legal liability, resulting either from bodily injury or property damage. Now, common coverages are 1 million per occurrence and 2 million aggregate. So now we have a bucket, but this bucket gets divided. So the total bucket usually for commercial general liability is 1 million, 2 million. The 2 million is the whole bucket, and you have $1 million per occurrence or claim. So basically that lets you keep that policy alive in case you have a very large claim. Now, commercial general liability can be combined with other insurance on the same policy, and even with this line of coverage, because it can include medical payments to others and products and completed operations. So when you look on your declaration pages of your insurance policy, which is always important to keep an eye on those, that there are usually other things listed with it other than just general liability. Now, something to really remember is it does not cover fault arising out of the performance or your professional services. And we'll get into that in a little bit. Now, I don't know if you've heard of an umbrella policy before, but it is just liability. It does not cover property, but it gives the company an extra amount of liability insurance on top of the general liability that's already on the original policy. Now, an umbrella encompasses more than just the liability. More than just your work liability. It'll also cover at-fault accidents if the company has commercial auto. So it extends away from just the business place onto any commercial vehicles you might have. And minimum coverage starts about $1 million, but I've seen $5 and $10 million umbrellas. And some contracts will require extra liability coverage. I've seen that asked by the federal government for some of their vendors. Now, Umbrella policies are also available on a personal level too. So usually on your homeowners, you have your personal liability coverage on there. And as long as you have certain minimum insurance coverage on your autos in your home, you could be eligible for an umbrella. And they're usually pretty economical, considering what could happen if there's a terrible accident where you might exceed your auto liability coverage. The umbrella can come in and take over, and it works for both ways. So let's talk about commercial auto. It's for coverage owned by the coverage for autos owned by the company. It covers anyone driving if they have permission of the company. Autos may be taken home by employees, but the insurance company should know that and will ask when you do the application process. Now, you'll also have to create a list of drivers, including their driver's license numbers and birth dates. So that will all happen in the application process. Now, because this covers a broad range of people, expect higher premiums than what you pay for your personal auto. Also, because you're a commercial entity, and if there is an at-fault accident, the lawyers will come after the company. So you might want to consider higher rates than maybe what you would do for your own self at home. I recommend to start out at $1 million CSL, and that's combined single limits. We'll discuss that in just a second. Like right now. So there's two different types of liability auto coverage, and this goes for personal and commercial. So there's split limits, and this is usually the three numbers that your agent might throw at you real fast, and everybody pretends that they know what they mean, but I'm going to explain what they are, because I find that a lot of people just are not really sure. So think of it as three buckets. Here's buckets again. So I used 100,000, 300,000, 100,000 for an example. The first bucket is for one person in the other car. And again, this is you at fault. So with this coverage, you've got $100,000 in your bucket to make that person whole again, to take care of their medical bills, take care of any missed work time, anything that they can basically sue you for. The second number is the bucket for more than one person in the vehicle. And this could be 2 or 20 people in the other vehicle. It's just more than one is the verbiage. So in this example, you've got $300,000 to take care of everybody in that other vehicle. And then the third number, or the third bucket, is for property damage. So in this case, you would have $100,000 to take care of the other person's vehicle, or if you're at fault and it's not with another vehicle, you say you run into somebody's wall, you would have $100,000 to fix that. Now, the other method is combined single limits, or CSL. And in this example, I used $500,000 CSL. And this is one bucket with the maximum amount for all damages caused by you. So this $500,000 would take care of 1 to as many other people there are in the car. And it'll also include property damage. So like I just told you before, I usually recommend for commercial auto policies to be at least 1 million CSL. So that gives you a pretty good bucket to take care of things that may happen. Oops. So there's also another thing with commercial auto, and that's hired and non-owned auto. Now, this covers the use of other vehicles, including employees running errands. It's like a blanket over all the personal autos that are in your company. So if an at-fault accident happens, the company will most likely get sued. They're going to try to go after the biggest account they can go after. Now, the policy will cover any judgments in this case after the employee's coverage is exhausted. So, for instance, you send an employee out to get lunch. You send an employee out to get office supplies or to run a file across town, and they're in an at-fault accident. Their coverage will be first. So they will have to have their policy cover the first parts of any kind of liability there. And then the hired and non-owned can kick in. Now, this coverage is usually very reasonable and should be added to most policies. And even if you have a commercial policy, let's say your business is an LLC and you're the only person in the LLC, I would recommend that you have hired and non-owned auto added to your policy, because that way it can save your family. I mean, it will cover any of the damage that's going on as long as you're working. And if you own your own LLC, like I have, you're always working. And so basically, this is a way to protect yourself, because you did create that LLC for a reason, or that corporation. You wanted to keep it separate from your personal accounts. And this way you will have that on there. And really, right now, price for hired and non-owned, depending on the business, there's a lot of factors, but it's usually between about $250 and $300 a year, $250, $350, right in there a year. And so that can give you about $1 million extra coverage. Now, the other thing is, and this is something I've never done, but I've had people suggest it, know your employees' coverage and their personal coverage. Ask them, have them tell you, make sure they're insured. Basically, I don't think it's going to determine if you hire them or not, but you might think about it if you send them out for coffee. So that's just a little 2 cents there. So let's talk now about workers' comp. The workers' comp in New Mexico is required for businesses with 3 or more employees. Owners count as employees, okay? So keep that in mind. If you have 2 partners, chances are it might be good to have a workers' comp policy, even though you might be excluded. And we'll talk about that here in a second. But definitely, I have run into husband and wife companies that hire one person and they need workers' comp, according to the state of New Mexico. Rates are determined by duties. Basically, the rates are determined by duties performed and payroll amounts for those jobs. So how that works is the state comes up with numerators for each position. So this is a list of different jobs, and they attach a numerator to that job. Then the payroll is multiplied by these numerators to come up with an idea for premium. So the more dangerous the position, the higher the numerator. So let's take, for example, a farmer. A farmer it was 10, but they lowered it to 9.5. So a numerator for a farmer is 9.5. It's a dangerous job. A lot of people get hurt working in the fields, working with heavy machinery. Now, an administrative assistant in workers' comp has a numerator of 0.3, 0.3. So that just kind of gives you an idea of the range. And so I had a client that owns a very nice farm. They're growing. They do probably about $500,000 a year in revenue. And they had a very high workers' comp bill. And so to get that bill down, and this is really if you've got employees that are doing dangerous jobs but are cross-trained to do other jobs, this is what comes in handy. Now, it takes an effort. It takes a bookkeeping effort. It takes a training effort, because what you want to do is, and this is totally okay to do, You want to change the jobs each day that person may do. For instance, let's say somebody comes to work and they work for 3 hours out in the field. So they sign in and say they're going to the farm. They sign out 3 hours later. Then they sign back in because they're going to package the produce. Well, there's a different numerator for packing, and it's down in the 4 range. So they're packing the produce and they're putting that together for another 3 hours. So then the same employee is going to deliver the produce to the grocery stores. So now we have a different numerator for delivery. Now it sounds complicated, but I have clients that have managed to find ways to do this on their phone. And really it comes down to communication, because if the employee slips up and doesn't fill out proper time, that could cause problems. You know, you need to break out the payroll. Even if they make the same amount for each job per hour, you've got to break the payroll out for a delivery code. You've got to break the payroll out for the packing code and the farm code. You know, it's one of those things, is how important is it to you? And I've seen, especially this one example that I'm using, they were able to cut their workers' comp bill in half. And their employees are still very well covered. And it was really, it just came down to becoming a culture and part of their operation. Now, owners that own at least 10% of the company can be excluded from coverage on workers' comp. Now, that doesn't mean that they're not listed, but they're excluded. And you have to sign an affidavit to the state saying that I want to be excluded from workers' comp. This comes in handy if your job as an owner is not as dangerous as your employees. So, you know, you might have employees that are climbing 30-foot towers. You might have employees dealing with dangerous chemicals. But if the owners aren't necessarily doing that on a day-to-day level, then it might be a good idea to talk to your agent about being excluded. Now let's talk about how to put all this into a policy. There's business owners policies. Simply a BOP is a preset comprehensive policy with a wide range of coverages. It's prepackaged and can be very economical. Now, not all policies can be BOPs. They're packages that usually fit a common type of business. They include things like sign coverage and document replacement in case your building burns down and you need your tax returns and they cost money. The insurance policy will cover that. It'll cover if you get robbed on your way to the bank or going to make a deposit with the receipts. It covers things like employee theft. And so it comes with this long list of extra coverages that you may or may not use. But it turns out to be pretty economical, because basically the insurance companies have figured out how dangerous these industries are. And you know, these are regular industries. There's a BOP for barbers, there's a BOP for hair salons, there's a BOP for auto repair, HVAC, and other types of construction. And so if you have a chance to be offered a business owner's policy, I highly recommend it. Now, if you're not eligible for a BOP, you'll most likely have a commercial package policy, or a CPP. And this is just adding different coverage modules or buckets to the general liability policy when it's not available. It could include a section for property or building. It could have a section for commercial auto and a section for employee practices liability. And it's a flexible approach to insurance coverage. And it's just building blocks of coverage that you need to a policy. Some business types can really only do CPPs. So let's look at a certificate of liability. And I'm sure that you probably have had to deal with these in the past. You know, if you want to do business with another entity, or another entity wants to do business with you, you're going to want to be an additional insured on their policy, and chances are they're going to ask you to be, or have them as an additional insured. This gets a little confusing, but you know, it lets you know if the other entity is covered. It lets them know that you're covered, and then, you know, you're going to really expect to issue these certificates showing that you have the proper liability and coverage in place to others. So your agent can provide these to you. And so it is something that is also called a COI. And the official form is an ACORD 25. And this is an example of an ACORD 25. So on it, as you can see, the top part where it says producer, that's your, let's say this is your policy, and you need to provide this to, let's say, the city of Albuquerque. The producer is the insurance agency that you work with. Their contact's going to be on the right. Where I have a green highlighted would be your company information, and you want to make sure that's correct. It's going to be your name, company name, and address. It's simple as that. And then to the right is the different insurance companies that have coverage on your policy. So not everybody can have all their insurance with one company. Sometimes you have to use different companies for different things. So when we come down to the middle of it, on the left, the far left, that's basically the letter that corresponds with the company. And then, as you can see, it shows your coverage for general liability, automobile liability, your umbrella, if you have one, and workers' compensation. So the pink highlight will let you know, or let them know, if they're an additional insured. There would be a checkbox in that line. So usually it's really only with general liability. It's never with workers' comp. You're never going to be responsible for having workers' compensation on somebody else's employees. So that's why it says NA under additional insured for workers' comp. But then in the middle will be your policy number, and then the dates, the effective dates. And then your levels or limits of coverage will be listed on the right. And then we've got a little description of operations box. Some people get really picky about that, some don't. And then on the bottom is a certificate holder. So this is going to be the entity that you are giving this to. Now, this would be the additional insured if the box is checked. Now, not everybody has to be an additional insured. You need to be doing business with these people where there is an opportunity to harm them. Now, if somebody just wants basically proof of insurance, we can issue these ACORDs to whoever you'd like, but we don't have to make them an additional insured. We just don't check the box, but it does give them peace of mind to know that you do have coverage. And then always make sure it's signed. It should be signed by the insurance representative down there on the bottom. Now, let's talk about professional liabilities, or errors and omissions coverage. Now, these are negligent acts that hurt the other company due to poor performance. So your general liability takes care of accidents, but not actually your professional expertise. And so that's where professional liability comes in. It protects you and your firm from claims arising out of neglect, negligent acts, errors, or omissions in the performance of your professional services. And it's very common for this type of coverage to be required to enter into a contract. Now, I have to carry professional liability. We call it errors and omissions, E&O coverage, because as an insurance agent, I have a responsibility to my clients to do my job correctly. For instance, if I'm your agent and you're my client and you email me and say, Mike, we bought a new company car. Here's the VIN, here's the make. So-and-so is going to drive it. Here's their birth date and their driver's license if you don't have it already. And I write back and say, got it, I'll take care of it. Well, we get distracted, right? Stuff happens. 3 months later, that automobile is in an accident and they're at fault. My client's at fault. So they call claims, and claim says, we don't know what vehicle you're talking about. Well, who made the mistake? I did. So I have an insurance policy that protects me, that will make my client whole again. I work very hard that doesn't happen, and knock on wood, it hasn't, but really anything can happen. So this is just a little example, but I'm sure that there's a lot of folks working in the rainforest that do professional work where this would really come into play. Now, it can be very smart to apply for this coverage at the start of the company. And there is also a portion of this coverage in your general liability, and that is products completed. So I explained that earlier with the medical costs. So what this will do is creates what we call a retro date, because all past projects are covered even after renewal. So once you have an insurance policy and maybe 3 years later, something comes up that was negligent back 3 years ago, even if you've changed insurance companies, that prior company is still responsible for your actions during that time that they had the policy. So the other thing that happens with this retro date, and people, when you sign up for professional liability, they'll ask you if you do have a retro date. So you don't want this professional liability lapse, because if you let it lapse, even for 3 months, it's going to start where you start that policy again. So you might lose coverage over those previous years. So this is something that you really want to talk to your agent about. Even if you're shopping, it doesn't matter if you change companies, you just want to keep a form of professional liability intact as your business grows and continues. Now, another thing that falls into this is standard of care. So what is the applicable standard of care? And this will come up in contracts also. And was it met? That's what an attorney's going to ask. What was the standard of care and was it met? So the official definition is the application of the standard of care is variable and depends on the specific circumstances of a project. Codes, regulations, licensing laws, and national standards form a framework, as does the work of one's colleagues both locally and on a national level. So make sure that your clients have realistic expectations of your services. If your client hands you a contract clause that purports to raise the standard of care to a higher level, delete the offending words and revise the standard to an ordinary or normal or reasonable level. And those offending words are words like superior and excellent. Your idea of excellent or superior might be different than your client's. So you want to keep this where it is basically quote unquote normal or ordinary. So consider the following clause. In providing services under this agreement, The consultant shall perform in a manner consistent with that degree of care and skill ordinarily exercised by members of the same profession, currently practicing under similar circumstances at the same time and in the same or similar capacity. I hope that helps. Whoops, missed again. Nope, not yet. Group health insurance. Okay, I've got to say, health insurance in the United States is a mess. I don't want to get political about it, but basically we have super high deductibles before really the whole policy checks in. I'm sure a lot of you have dealt with it, and for me to sell it, I have to grind my teeth and really apologize going through the whole process. But to get a group plan for your business, you need at least 2 employees, including the owner, to be eligible in New Mexico. In New Mexico, the cost of a small business health insurance plan will vary based on several factors, like the age of your employees, gender. Men are more expensive than women in healthcare, number of dependents, and a few others, depending on the provider, such like tobacco use and location. Rural areas pay more in health insurance than urban areas. And then New Mexico companies with 50 or more full-time employees must offer health insurance coverage to their employees. They don't have to pay for it, but they have to offer it. Do you have a will? You know, I ask every client I have in the first meeting, do you have a will? Believe it or not, 80%, 80 tell me no. Scares me. So if you've ever had a friend or someone you know pass away without a will, it can be very difficult. It turns out to go through probate. It can be a very timely and frustrating process to close that estate. Now, believe it or not, even if you don't, you still have a will because the state of New Mexico has one for you, and it says you got to go through the courts. So that brings in succession planning. And what is it? What is succession planning? Well, it's a constructed plan for emergency situations where a death will change the complexion of the business. So make sure you and your partners have a will or trust in place, even for your families. That's more important for them than the business. And this can be done when setting up your LLC or corporation. Your attorneys can either refer somebody, or chances they can probably do it for you. Now, life insurance is regularly used tool to help the business survive in case of unexpected death. So, but remember, before you make any decisions about using life insurance for business succession plan, be sure to discuss it with your financial advisor, attorney, and tax professional. But I'm sure they'll be very supportive. So there's a couple ways of looking at it. To protect the business from the loss of a key employer or top performer, if you're concerned about losing a high-producing employee and the significant impact that loss could have on your business, having an insurance policy on that person, known as key person insurance, could help the business recover financially and speed up hiring a replacement. A term or permanent insurance policy can be used in this situation. So I think I skipped another one. I keep double clicking. I'm sorry, because this one's important. So ensuring a successful transition due to death of a partner. Now, a lot of times, if there's a death to a partner, the partner's spouse will become your new partner. Now, you and your partner can come up with a buy-sell agreement, and it can provide liquidity for you to buy out a deceased partner or spouse and take their share, pay them their share of the business, helping reduce the business interruption. So this strategy can help provide more certainty on the when and how of ownership transition. A term or permanent insurance policy can be used in this situation too. So let me just tell you about term and permanent life insurance real quick. A term policy is like renting a house. You have a lease that will let you stay in that house for 10 years. You pay your rent. After the 10 years, it's over. You have no equity in the house. You got to move out of the house. If you want to stay in the house, you got to sign a new lease. The lease is going to be more expensive because you're older, and that's how life insurance works. In permanent insurance, which ranges in different little subsets, but a permanent life insurance policy is like owning the house. Your premium is probably going to be 2 to 2.5 times higher than the term, but you build equity and it will last as long as you're alive. So the other thing is, make sure when you buy either type of life insurance policy is that the rate stays the same. There are some life insurance policy rates out there that increase, let's say every 5 years. I highly suggest you take a little higher rate in the beginning and keep that rate consistent for the life of the policy. Now, what you do is different than anyone else. And I'm sure a lot of the things that you know, the audience here have some things that people have never even heard of. So how do you get started with buying insurance? Well, I suggest an independent agency may be more likely to help because they have a variety of companies to work with. Independent agencies, for instance, my agency, we work with over 90 different insurance companies. Make sure the agent understands what you're doing. Please be ready to explain exactly what your business entails. I hate to put it this way, but you're going to have to dumb it down for us. You know, we're going to ask many questions. Every little bit of understanding your agent has will help them get a policy that works well for you. You know, because your agent's going to have to go to either a marketer or an underwriter and tell them what you told me. It's like the telephone game. So sometimes you might have to fill out an application. That's great, and fill that out really paying attention to it, because it will help you get a policy that works. And if you can't find coverage, if you're having trouble, check with some of your colleagues. They will more than likely be able to tell you how they got their insurance and maybe give you a good referral. Now, an insurance policy, it's a living document. So make sure you keep up your coverages. When you make changes in the business, you want to make sure the policy is still effective as it was when you started. You know, it's like an amoeba. It can grow and contract, but it's up with you. It's up to you to contact your agent and let them know that you're having these changes, and they can make them. But you know, even if you're doing that once a month, it's a living document. It can change as many times as you need it to. Now, one thing that kind of sneaks up on people is there's an audit at the end of commercial policies. And a lot of times it deals with, definitely with workers' comp. They're going to want to know your payroll for these certain positions, just like I told you before. So you want to be able to, if you start seeing your payroll changing, where it's going up, your business is strong and you're hiring more people, you might want to contact your agent to let them know that we might need to increase our payroll limits for workers' comp. That way they can do that. You're going to end up paying more in premium, but it could take some of that heat off after the audit, because there's going to be a true up at the end of the year on that audit, because the insurance company is responsible for, if they gave you a premium on your revenue, based on your revenue, and the revenue grows, they're going to charge you that extra premium. Same with workers' comp and payroll. So that way you can kind of cut it off at the pass, and that needs to be paid in one payment. It's not like you can just add that and go. Now, it also kind of works in the opposite way. If you tell them that you're going to make $500,000 and they pay the premium for that, but you only make $250,000, you're going to get a credit. So I do have one client that is in the dent repair business. And so he doesn't mind the true up. That tells him he's making extra money. So he will, he'll continue. If we have a hail season, a really bad hail season, He might make 3 times more the revenue he will when we don't. But he just stashes that money away. He figures it's better for him to hold on to it than the insurance company. And then when he gets that big bill at the end of the year, he's got the money ready to go to pay it. So let's see if anybody has any questions or anything like that. I'll be happy to answer them for you.
Hey, Michael, we have one question in the chat that says, what is the minimum amount of and type of insurance that you recommend for a small business startup? And under what circumstances would you recommend that a company self-insure?
Good question. So it really depends on what you're doing. That's most important. But let's say it's even if it's a barbershop. The minimum amount is going to be 1 million, 2 million for general liability. That's the minimum amount. You don't want anything. They don't create anything less. I mean, you can do 2 million, 4 million, and supplement with an umbrella, but that is definitely what would be the minimum. I also suggest, I was in the restaurant business. And everybody, when they start a restaurant, thinks they're going to make $1 million the first year. I tell them, let's start out at $100,000 in revenue, because just like I talked about before the true up, you can increase that. So I'll check in with my client in 3 months and say, how's it going? Well, great. We're already at 75. We'll increase it that way because we can do that. So as long as the company's comfortable writing it and your agent feels comfortable with it, start low and you can increase. Now, under what circumstances would I recommend that you self-insure? If you're Elon Musk, or the University of New Mexico, they self-insure. I really think that paying out maybe $1,000 a year can help you sleep better. But for some reason, you're driving your car for a work-related errand and you kill somebody, they're going to come to you after your house. And that is basically what you don't want to happen.
And we have another question. As a manufacturing entrepreneur focusing on home construction products, should you be concerned about product liability insurance as you're ramping up business?
Yes, you should. And basically it can be in your, it could be already a part of your general liability. It could be there. Now, product liability is a little different than professional liability, but it's kind of along the same lines. Some companies, it depends how obscure the company is and what they're doing. So some companies, if we are dealing with explosives, we're dealing with demolition or asbestos removal or things like that, their product liability is going to probably have to be written with a different company. But if it's more of general products, and it could be really part of your 1 million, 2 million, 1 million, 3 million general liability in there, and it has its own line, and it's called products completed. And so also that will give you your retro date also, because if you're doing a construction product, that's going to be there for a long time. So that even if it's included with the GL, that starts your retro date. And so, and then also, I think you want to know about a specific type of insurance. That's going to depend on the hazard. And your agent and the underwriter are going to refer specific types of insurance to you. So then you're basically going to kind of take their lead, and it's going to be what you can be offered. And so let your agent do that work for you and explain it to you afterwards.
And so there was a second part to the question that I'm not sure if you already addressed.
No, I can see it. Is it starting a home business?
No, this one is the one that was emailed to us beforehand.
Yeah.
So what type of specific insurance? So that would be just talking to your agent.
Yes. So the agent will get with the underwriters, and the underwriters will suggest what type of coverage they want to see you have to write them. They're going to make sure that they're covered to be able to know what you're doing, and that they will say, well, in that case, we want to provide this type of product, and the agent will be the go-between on that.
And then we have the other question in the chat.
Yep. So if you're starting a home-based business and you work out of your house, that's perfectly okay. You can use your address. You can create a commercial policy. Depending on what we're doing, it's probably going to be. Let's. How about this? You can, well, to reconcile your personal insurance related to your home, it's going to be two different things. So if somebody is visiting you at your home on business related instance, then your commercial policy will cover that if they slip and fall and hurt their head or something like that. Or if there is a theft and they steal your products that you have for your home-based business, that will go under a commercial policy. Now, for your home, if you have grandma over and she slips and hits her head, you have coverage for that on your personal policy. So it really is going to depend on why are they there. And so, you know, a real quick example, I've got a fella who makes handlebars for bicycles, and it's a really cool deal. He works out of his garage. He takes these metal rods and forms them into basically custom handlebars. And so he's got liability coverage in case the handlebar breaks and somebody wrecks and hurts themselves. But he also has coverage if somebody comes in and steals his handlebars. And if anybody comes to visit and bring their bike over and something bad happens, he's got coverage for that. And he's even got some data coverage in case, because he takes credit cards over the internet in case he gets hacked. But if his house burns down, okay, that's going to be the personal policy. But his business personal property will be covered under the commercial policy. And here's another thing. In these commercial policies, all of them, there's a line of coverage called damage to premises rented to you. So this goes two ways. This could be in your house. So let's say he's welding and he burns down his garage. Well, he's got $100,000 in his commercial policy to cover that garage. And so, you know, that happens, you know, you've got that for people that rent in strip malls or in other people's buildings. There's a certain amount for damage to premises rented to you.
I think that's all the questions we have, unless anyone else has another question. You can just unmute yourself and ask it. If not, I think we can call it a day.
Well, thank you very much. I really appreciate everybody hanging in there. I hope I did all right. And Cecilia, you've been great. And thank you very much to the Rainforest.
Thank you, Michael. This is super important information for all entrepreneurs to know, and definitely something that not everybody knows about or even thinks about. So we really appreciate you presenting for us. And for those of you attending, we will be sending an email with a quiz, which gives you the opportunity to own to earn your entrepreneurial capabilities certificate from our university center. And then there will also be a recording and the slides included on that email for you to review if you need to. So thank you, everybody, and we will see you at our next webinar.
Thank you.
Bye-bye.